Hello and welcome back to Crypto Clarified. I'm Dovila Shilinskita and I'm responsible for digital asset research at Wisdom Tree Europe.
And my name is Vin Tran, and I'm responsible for business development at Wisdom Tree Digital Assets.
Today we're talking to Tanner, CEO and the co-founder of StableC, and the discussion is very interesting because it has real world advice for people who are trying to build out new businesses and real world value illustrations for people who are trying to see whether there's any point for them to get involved with on-chain world.
Hey Tanner, welcome to Crypto Clarified.
Hey Ben, how you guys doing? Appreciate the time.
Doing well. I don't know if you can tell from my voice, but the Knicks won this weekend, so it's been quite the recovery this week.
Electric in New York.
Yes.
That's all I could say. It was an
Electric.
amazing weekend.
I'm glad you were around to witness it. But yeah, we're going to start the podcast a little differently today with some rapid fire fun questions. So I hope you're ready. Number one, what is an app, tool, or product that you've been using recently that made you think, I wish I built that?
Claude. But yeah, I was gonna say, but outside, yeah, Claude for sure. I mean, outside of the LLMs, I love the plane. There's a app called Plane Tracker, or Plane Finder. And so when you're in New York, you can always just look up and see where the planes are going to and fro, and they got a whole bunch of data there. So I enjoy nerding out on, on some of the flight characteristics.
That's a good answer. I like that. Okay, stablecoin, Bitcoin, Ethereum. If you had to explain one to your parents, what would it be?
Oh, stablecoin for sure. Stablecoin, that would be my go-to.
Okay. Number three, and then we're gonna kick it off. If StableC had a theme song, what would it be?
Well, we gotta find something with a nautical theme. Um, it's a good question. I'm gonna have to think about that one for a minute, but it definitely has to fit with the nautical theme. So,
Okay. That's
it's,
a hard one to put you on the
David
spot for.
David Bowie, something with David Bowie comes to mind, but I'm not sure. I gotta think about that.
All right, love it. So that's a good segue. So StableC, please tell us about StableC. What are you guys? What was the spawning of it? What was the inspiration behind StableC?
Yeah, I mean, we've been on the journey for almost 2 years now. But the founding team comes from Block, so formerly known as Square. And we were always focused, even when we were at Square slash Block, we're always focused on building decentralized protocols for cross-border payments. So the genesis and still very much the ethos of the company is centered around global settlement. So we help companies settle capital to around 40 countries today. Always intracompany settlements. So like think John Deere needs to move, 20 million from the US to and settle it to its South African subsidiary. So we do intracompany settlement. And then today we're really a digital asset platform that enterprises can come to for access to capital markets, access to global settlement services, and access to advisory services. So we're really showing up as a corporate platform built for finance teams, treasurers, etc., to access diversified capital markets products, settle funds globally, and then leverage our AI for some advisory services.
Amazing. And when you and the Block team came over to then build StableC, did you have an end user in mind?
Yeah, so we've always, taken from the Square or the Block ethos. Square serves small businesses, Cash App serves, users in the U.S. That are mostly mid to low income, and they build those financial services around those specific demographics. We had similar ethos of that. All there's a lot of great work has been done in the on-chain space over the last 5-10 years, and where that matures to at a point in time today where you can actually access best-in-class financial services on different blockchains. And so we're squarely focused on ensuring that you can provision those out to real economy businesses that can start to access best-in-class financial services that were historically only relegated to the top 1-2% of companies out there. So our target demographic from an ICP perspective is we work with a ton of finance teams up and down the stack, CFOs, controllers, treasurers, but we primarily focus all of our efforts on real economy businesses. So businesses that are mostly building in the physical world, not necessarily the digital world. And yeah, helping them access, cheaper cross-border settlement services, access on-chain yield products, and then reduce their advisory costs across the board.
It's fascinating. When you talk to businesses that are involved in the real world, how do you kick off the discussion about, stuff that's on chain? How do you make them comfortable with what you have built out and that it delivers value for them?
Yeah. Yeah, it's a great question because, ultimately we lead with the value propositions, which are, do you facilitate cross-border settlement today? Typically the answer is yes. And then when you ask who they either use like a fintech that's been around for 15, 20 years that charges 100 to 200 basis points per trade. And then they may or they use a bank, and some of those banks don't even participate on the Swift network. So they get charged an exorbitant amount of fees for settlement, and so we just, essentially ask them, like, "Do you want access to cheaper settlement services? And or do you have access to, like, high-yield business savings products or capital markets products today? Yes or no?" And the vast majority say no, or they just have, like, a traditional, like, low-yield savings account at, like, 2.7%. And so we always start off with that of, like, is there something in your back office that you would like to optimize? And typically the response is yes, we would love to reduce our cross-border settlement costs, or we'd love to access capital markets products that have higher yields on them. And then from there, we show them the platform. Our platform looks very much like a Web2 bank. So like you log in, it looks very approachable, right? It's not like it doesn't follow some of the design principles that you see in like crypto platforms. And then from there, we have a conversation on what is the technology behind the scenes, i.e., stablecoins and digital assets like Wisdom Trees, WTGXX product, etc. But we never lead with a stablecoin narrative. I mean, to the same extent that if you go and you're Square and you're selling like merchant payment acceptance products, you're never really talking about like, do you want the underlying ACH, same day ACH RTP rails? Like most merchants just are in the business of optimizing their capital efficiency. And so we lead with that. We meet them where they're at in the moment.
Fascinating. So there are clear values for getting involved with you for any real world business. But what are the risks that you tend to highlight to them?
Yeah, I mean the risks for them, it's less of a risk. It's more um, in education. I think the crypto space writ large has been um, always riddled every 3 or 4 years with some big boomer bust cycle. So a lot of folks, here, even though they don't like the finance folks, they're not actively participating in the on-chain economy day in, day out. So when it's not a risk, it's more of an educational barrier of like once you actually sell them on the value props, it's taking time for them to get comfortable using a new piece of technology. And it's not like we're selling, like SaaS products that are orthogonal to their day in, day out stuff where there's no real risk of like using a CRM tool or some new design tool. You're actually dealing with like the corporate treasury of a business. And when you're engaging with like financials of a company, the operators are, they're not buying innovation, they're buying to de-risk something. And so you have to really educate them on why the product is robust, how it drives capital efficiency, and then why security is, front and center from every design principle that you have. And so they ultimately always start as like a pilot. They put some capital in, they start testing around, with each month, and even what we see in our own internal data, with every month, the same customers that we have start putting more and more capital into Stable C. And so, we're on the early adoption curve. It's still early innings for like stablecoin and digital assets across the board, both in the US and the world. But what we find as companies come onto our platform, with each passing month, we see trust grow in the use of our services, and that trust manifests in more assets under management on platform.
I think you said a lot of good points there regarding trust education. I think that's where it starts. And you also mentioned a lot of use cases for 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 why someone would choose stable seed. You mentioned optimization. So what do you think? So which of the use cases you think uh, clients typically find more compelling? Is it the stablecoin side, like being able to settle faster, cheaper? Is it the yield aspect? Because I think walk us through like the product dynamic of stable C itself, right? Like the offerings that you guys have.
Yeah, so I mean, from an offering perspective, we offer global settlement, so always intra-company. We don't do third-party payments, etc. But we offer intra-company settlements out to companies that have subsidiaries abroad. And the use case there is that their working capital is locked up just in the correspondent banking system, right? So, like, if you're a company and you import a good from like South Africa, and you have a subsidiary in South Africa that runs as a loss leader, a company needs to move money to South Africa to refund the business, so to speak, on a monthly basis. And that capital to get to South African rand takes around 3 to 5 days. And so, if you're moving a B2B payment, an intercompany settlement, so to speak, you typically are moving 5, 10, $20 million in a single transaction. And if that takes 5 days to settle, that's like $20 million is just stuck in the correspondent banking ether. So you just think about the opportunity cost in virtue of interest on that capital for 5 days not being put to work, is a lot of efficiency, like capital efficiency that's lost. So that's the first use case that we offer out. Second use case that we're finding is a lot of the treasury teams in the mid market section of the United States, like, they just don't have access to high yield savings products. And if they do, it's just one singular product, and that introduces capital or counterparty risk. And so, most of these companies have investment policies, and those investment policies kind of dictate, hey, you can't have singular counterparty risk. You need to diversify it, not least from a counterparty perspective, but also from an asset perspective, to make sure that you don't have like concentration risk that you saw with like Silicon Valley Bank back in 2022 or 2023. And so for them, they're like, we've never had access to diversified capital markets products, and we've never had access to any sort of high yield traditional money market fund that you would see out there. And so the lowest hanging use case that we see from just like it's the one of the easier selling points is, do you want access to something that you can sweep your idle cash flow into, and make some yield on that? And so pretty much everyone says yes. And then once they start leveraging a money market fund, the next question logically follows of what else can we get access to via this portal?
Got it. So let's double click on the money market fund side. And I think a natural progression is partnerships. You announced a couple interesting partnerships. I'll let you say the names yourself. But talk us about those partnerships and why are they exciting?
Yeah, so we announced our partnership with Wisdom Tree, and specifically for the WTGXX tokenized money market product. And we've been through the moon excited, not least because their team is fantastic, but also because we're seeing great adoption from our client base of having access to these products. And so, what gets us really excited there is Wisdom Tree also has a diversified set of capital markets products on chain that sit behind it as well. And, our customers are finally getting access to uh, what they classify as high financial services, right? So, like, if the three of us on this call, if we were, the C suite at insert X Fortune 100 company, like a John Deere or Coca Cola, if we had like 1 billion in free cash flow, our money is always being put to work by one of the corporate transaction banks. And that money is being put to work in money markets, futures, forwards, hedging strategies, swaps, derivatives, like equities, you name it. Um, but if you're a mid-market business and you bank at like a state bank or a regional bank, you typically have QuickBooks and Hope, and you're like, sounds great. We'll figure out how we save a little bit of this stuff. But they've never had access to any like sophisticated financial products, and so we're finding that there is a groundswell of demand from real economy businesses that are just wanting to access capital markets in a way that they can put idle cash that they have to work. And the interesting part about that there is that when you go into the real economy or companies that are building in the physical world, most of them have well, all of them have seasonality to their businesses, but then also if you think about like a manufacturing use case, you typically know when you need to procure the goods and materials and then when you need to deploy those goods and materials. And so in the procurement phase, a lot of companies typically allocate or like sideline capital because they know they have a big purchase coming up in a month or two. And so you'll see like in Q1, companies will essentially escrow 5, 10, 20 million and just park it in a checking account because they know that they're going to use those funds to buy goods in Q2. And so right now, there's just a ton of capital that just sits in a checking account that's being sidelined because they know it's going to be put to use for buying some goods in the real world for their operations. And now they finally have the ability to put that into high yielding capital markets products that have liquidity on demand for them. And so it's a new use case that's being. I mean, it's a historically an old use case, but it's a new use case for traditional businesses that have just been a bit financially underserved from some of the state banks or the regional banks in the U.S.
You had a really busy first half of this year. It's incredible. Two big partnerships. How's the second half of the year looking? Are you focused on execution or will there be any new big announcements that you will make?
Yeah, it's a bit of both.
Excellent.
Um, yeah, so we've got some exciting new announcements coming out. Gonna offer some new products through the platform as well. So you'll see some press come out in the coming months around that, and then really just focusing on execution. We got a handful of big customers that have recently come onto the platform, and it's there's the onboarding aspect, but then you also it's very critical, like in the first 3 6 months of some of these companies that historically have never participated in the on-chain economy. When they do, you want to be there at every step with them along that journey because there's a richness to the insights that they give you. And so we're really focused on spending a lot of quality time with our customers, hearing what their pain points are, hearing where some of the inefficiencies reside in their back office, and then building for them, serving for them. Because historically, they just have a relationship with like a state bank or a regional bank. They've never really had access to somebody that would listen and build products on their behalf. And so we're really keen on just spending quality time with our customers and learning what they need and how we can build new products to um, serve use cases that they've been wanting to have unlocked for them.
Makes total sense. And going back to stablecoins, so at the start of our discussion, you mentioned that you're involved in over 40 countries. Which country has surprised you the most with respect to the demand that they have for stablecoins?
Yeah, I mean, most of the stablecoin settlement use cases that we see are typically global south to global south. So like Brazil to Hong Kong is a big corridor, like South Africa to Hong Kong is another big corridor. US to some of the emerging economies is a large corridors out there. But the interesting thing that surprised me is that um, two things. One is that, stablecoin is really being used as like a tool to facilitate settlement. And settlement, contrary to a lot of the LinkedIn and like Twitter social media influencers out there, um, settling in stablecoin, pretty much every business wants to get to local fiat. We haven't had a ton of demand of like, we would love just to settle in USDC and stay in the on-chain world because ultimately, I mean, that makes sense for like a consumer use case to hedge against volatility of a currency that may make sense in some like high kind of like exchange or brokerages type use cases. But for by and large, if you're a business, you need to pay your employees in local currency, and then you also need to pay the bills, like the utility bill, the paying your local vendors, your local contractors, in local fiat. And what surprised me is that in country like so the stablecoin sandwich of like US dollar in USDC to like Brazilian real, in countries where you need to settle local fiat, it is really efficient in countries that have real-time payment rails. So like Mexico has SPAY, Brazil has Pix, India has UPI. And so countries that have RTP systems, um, end-to-end stablecoin settlement of like fiat in, stablecoin cross-border, fiat out is really efficient. And some countries that don't have RTP systems, the on-chain movement happens instantaneously, but the actual settlement still takes 4 hours, 6 hours, sometimes 10 hours, always same day, but you're constrained by the local banking infrastructure of that country. So the more exotic you go, the settlement time of that fiat is ultimately constrained to the banking infrastructure of the country, which has been an interesting, I guess, intuitive now that now that we see it, but it was an interesting learning for us.
Interesting. And does that pose a challenge working with so many different jurisdictions?
Um, not so much of a challenge, more of a expectation management, because companies come to us and for like on the settlement use case side, they'll come and say, I've heard about stablecoins. I heard it's 24/7 programmable money, settle instantly anywhere, all the things. But then when you actually go into building and you actually start to use the product, a lot of them want to settle in local fiat and different currencies around the world. But so you have to manage that, like, if it's in a corridor like Colombia, um, you still subject like, Colombia does batch processing on a 4-cycle window throughout a 24-hour period. So, depending on when the fiat funds land, it could take 1 hour, it could take 6 hours, could take 8 hours, depending on where you are in that batch processing cycle for the local Colombian payment systems. But so as long as you set that expectation, customers are typically happy. Um, and that is still a material upgrade from where they're at today. Because if you try and send an international wire to Colombia, it's going to settle in 3 days, 4 days time. So same day settlement is still a material upgrade from the historical products that they've been using.
Yeah, absolutely. That's a problem that I think that I talk a lot about is going to a soccer game or football. It's one cup season, so I have to call it by its proper name. Going to a football game in London, it took so many different avenues for me to then say, you know what? The only way for me to be able to pay you right now is to wire you the money. And for him, obviously, it's like I have to wait 3 days. The things that go wrong, I don't know. But this provides another level of assurance. But again, I'm doing that for a $200 ticket, not multi-million dollar transactions. So it's a different scale, right? Uh, so that is interesting. So in terms of that use case, we talk a lot about you mentioned real economy businesses. What types of businesses you think benefit most from this that require this type of global setup?
Yeah. I mean, for the end-to-end use of stable C products, it's mid-market and enterprise customers that because typically it works best if you have subsidiaries abroad, and you have like idle cash that you can invest and make meaningful interest on the yield that you generate. But our product is agnostic. I mean, we really want to take products that were built for Wall Street and provide them out to Main Street. So, we really don't discriminate on businesses of any kind. Like on our platform, we've got companies as small as, one company makes $400,000 a year in revenue, and they're on stable state. We have companies that are publicly traded, et cetera, et cetera. So we really run the gambit. But like our core thesis is if you're building in the real world and you don't have access to quality financial services, best in class. You can now get access to best in class financial services that historically were relegated to the privileged Fortune 100 out there. And so, our core focus is mid market, bordering on the edge of enterprise, but our flow free to sign up on stablec.com, and so we see businesses of all sizes end up signing up.
Amazing. And then in terms of like the roadmap going forward, so to really mention the next half of the year, you have your teasing partnerships. How do you see the platform itself evolving?
Yeah, I think it's continuing to build out features like the foundational architecture of our platform is like set in stone. It's secure. Um, we've gone through all the requisite testing requirements to build for enterprise grade security and institutional use cases. So the architecture itself is set in stone. Now the question becomes of like what features do we want to add and value added services do we want to hang off the platform? And then for us, the way in which we think about product development is we really lead with what the market wants. So spending time in virtue of like what our product roadmap looks like, it's really spending time with our customers and hearing from them directly what they're looking for, and how we can go best serve that. And so, for us, we will offer new capital markets products out through the platform because like that's just what we've heard. Um, and then we'll continue to build out some of our AI use cases for the back office that help alleviate tasks that are uh, typically low cognitive tasks but high time sensitive tasks. So there's just quarter close, closing the books at the end of the month. There's some of these accounting challenges that happen that are really difficult. Well, they're low cognitive. Uh, Effort, but they take a lot of time to do. And so we're gonna try and help automate some of those back office services as well.
You're clearly building on top of the existing system within the clients that you have. Is that your philosophy that you should enhance what they already have? Or is that simply a pragmatic way of building a business?
I think I think philosophically innovation is interesting because innovation in financial services, like Mm, our philosophy is like if the financial system was disrupted overnight, I don't think that's a net good thing for the world. Like there's some industries should be disrupted overnight, but when you're in highly regulated spaces that touch consumer finance, business operations, etc., I'm not convinced that disrupting that system uh, overnight is good for the world. And so when you think about innovating in regulated spaces, whether that be healthcare technology, financial technology, nuclear energy technology, etc., um, you should always stand on the shoulders of giants with your innovation. And when you squint at it, innovation looks like a 2-degree increase in efficiency of something that historically existed before you. And so, from a when you think about that and you break it down, it's more or less like the fiat system and like the banking system that exists. Uh, it is robust. I mean, it works pretty well today. And then where you see fintechs from like 2015 or 2020 or even 2010 with like the rise of Stripe, um, a lot of these companies were innovating on top of the system, right? And you took this robust piece of architecture that is both domestic and global in nature, and you've built value added services on top of it. And those small gains in efficiency have absolutely massive TAMs associated to them. And so for us, it's like, you know, our tagline inside a stable C is keep your bank, upgrade your capital. So like we're very much telling our customers to like stick to your bank. We're not trying to disrupt your banking relationship because that comes with a ton of like cognitive angst of like, oh no, I gotta switch my bank provider. I've been using them for 20 years. Keep all of that stuff. Just upgrade your capital, and we provide tools to help you work a little bit more efficiently with your back office. And so for us, that efficiency comes from a new technological paradigm shift, which is blockchain, stablecoins, and digital assets. And so for us, it's not about disrupting the old system. It's around evolving the old system to keep up with the times. And if you do that in an appropriate way, that is with compliance at the foresight, security at the foresight, and then really being clear on the value props, you should be able to create innovation that sits on top of the old system, and you live in a new world there. And I think that that's just how innovation goes in highly regulated environments. Also, because if you're not in, the major innovation capitals of the world, innovation and change is scary to a lot of people. Not least in life, but also especially when it comes to finances. If you're a third generation owner of a flooring company, uh, you really you're really looking out for you're a steward of the capital of the business. And so to change that requires a lot of trust, and it requires something that looks like what you have, but then you can see the efficiencies at the margin, and that's enough to get folks to adopt a new piece of technology.
Good points. Yeah, I fully see your view. In stablecoin space, there are a couple very large players. How do you view StableC in relation to them? Are you a competitor, a complement, something different?
Yeah, I mean, it depends on the providers, but there's a few ways to think about competition. There's like competition on product. Do folks have similar products out there? There's competition in like the markets that you serve, and then there's competition in virtue of just velocity and like how you ship and how fast you ship and what new features you can roll out. So I think a lot of the major players in the stablecoin and digital asset space, most of them are partners. So you know, we work with them deeply on some of the pieces of technology and new features that are coming out. So by and large, we don't compete with a lot of folks in the stablecoin or digital asset space. We're mostly partners to them. And it's primarily because StableC is focused on going after companies in the real economy. And that is, it's a different go to market, it's a different set of feature requirements. So we don't see like most companies in the space typically sell you know, APIs, and if you build APIs and you sell those APIs, you necessarily sell to a developer. If you sell to a developer, you're probably inside of a tech company or a tech forward company, et cetera, et cetera. And so we're really trying to break out of that ecosystem and focus on businesses that you know, are the backbone of any economy in the world, not least the United States, but just globally, because the vast majority of businesses are, you know, they're mom and pop shops, they're mid market manufacturing companies, they're enterprises that focus on like IT solutions or something like that. And a lot of those folks typically don't get access to best in class technology, not least financial services, because it's really difficult to sell into. Sales cycles are super long. Uh, you know, regardless of like Silicon Valley or New York, if you go into like Des Moines, Iowa, people buy on relationship. They buy on human trust, you know? So if you're in Silicon Valley, you can say, check out my sweet API docs in an email, and then some dev dives into it. You're like, great API docs. Like, that's awesome. And they might buy on that. But if you go into the real economy, someone's like, I need to have a beer with you and I need to break bread with you. And I need to trust you before I buy what you're selling me. And so that way of like going to market and working with these companies is kind of like how we differentiate. And we don't see that many competitors, you know, focused on that, because there's a lot of effort that goes into that.
Yeah, I can imagine. I can't agree more. It's quite ironic that what we're building in a trustless system when it comes to blockchain becomes very trust based, especially when it comes to getting people on chain or getting people comfortable with new technology. Uh, so yeah, I couldn't agree more. So kind of going off that point, you mentioned you don't really have like you're open to all business, right? Large companies, small, medium-sized companies. 5 years from now, what? How does that sales funnel change? How do you find success? 5 years down the line, what does that look like for you?
Yeah, I mean, we govern the business on one primary metric, which is assets under management. So, or assets on platform. So, whether it be USDC or USDT or WTGXX, so we're looking at platform balance, and if that goes up, then we're doing good. And so it's a very simple metric, but it's also a metric that, you know, we can align not only our investors but our team around to show demonstrable traction. So, you know, in 5 years, it's really still keeping it very simple, because, like, as with anything, you know, you start with simplicity and you layer in complexity over time. But the North Star for us is, uh, you know, are folks trusting the platform? And how trust manifests itself as people are putting their capital with StableC. And that is a very big ask. Like it's a quite an intimate ask to ask a business to move 1 million, 5 million, $10 million into a platform that is new. And so for us, you know, we need to continue to build the features that the market wants. Like I always, my philosophy on startups is you have an idea in your head, and that idea is cerebral and it's fluid, right? Product at time A is always wildly different than product at time Z, because you're getting all these inputs from like the team, the market, your investors, etc. So the idea, like ideas are always they're live, they're living. And then you take an idea and then you manifest it in reality in virtue of a product, and then that product needs to fit in a market. but the market is also a living creature. So like the markets are moving, regulation is changing with like the Genius Act, with Clarity, with each acquisition that some of these titans of industry make. You breathe legitimacy into the space, and so some new corner of the market wakes up, and like supply chain companies are like, now I'll experiment with stablecoins, and so the market is living and the ideas are living. And so the question is like you have these two dances simultaneously going on, and it's like, how do you make the product fit in that market that is always moving, and then subsequently the products are always changing. So like where we're going to be in 5 years, I wish I had a great answer to that, but in reality, we'll go where the market is, and we'll go where our customers want. And there's a core set of features that need to be true. So our core platform will always stay the same. We'll always do settlement. We'll always do capital markets, and we'll always do advisory services. But the features that are layered in on top of that, and what the world looks like in the era of AI, will probably change the hue of the product. It won't necessarily change the shape of it. So we continue to listen to what our customers want. We follow regulation really closely on what's happening on the Hill, and then continue to learn from some of our competitors, or learn from orthogonal companies that are building really interesting products, and continuing to um, take inspiration from those ideas and marry them with ours.
Mm. Yeah, I love everything that you mentioned in terms of what it takes to really survive in this ever evolving market. And you mentioned the one of the most notorious products in the beginning of this podcast is Claude, right? And how that's going to change things. Which is actually, I think, a good segue to what I want to talk about in terms of what it's like to actually be a start, right? So you, a lot of your team came from Block. I'm assuming you were close there, you were colleagues there. What conversation really did you guys have that made all of you kind of say, you know what, let's try to make this work. Let's do this.
Yeah, I mean, when we looked at the stablecoin space, and this is just how quickly the market evolves, but in 2024, um, a lot of the infrastructure that was being built or had been built was really best in class infrastructure for retail use cases. So if the three of us wanted to go start like a gig economy payments company where we could like take US dollar and pay out like gig economy where contractors in like Mexico, pretty simple. You go, you get a Fireblocks wallet or a Privy wallet or a Util wallet, like any of the great wallet providers out there. You build into an on ramp like a bridge, and then you build into an off ramp like a Bitso and that damn, and then there you go. You got your cross border payments, and you can put an application layer on that, and that there you go. You're now a cross border payment company serving the gig economy.
Easy.
Um,
We should do it right
yeah,
now.
easy. Yeah. Yeah. That's the that's the blueprint for anyone listening. But that in 2024 was all built for retail, and like the way in which consumers onboard, that KYC process is very different than how businesses onboard to a platform. Liquidity is very much different, where like most consumer use cases are high volume, low value. So, if you think of like remittance use cases, you have a ton of remittances that go across border every day, but the average ticket is around $82. So low value. And what that means is that when you pipe into different banks or exchanges, liquidity is not really an issue for small ticket transactions, because you can always find $82 laying around someplace to do foreign exchange. Um, and then like there's no real reconciliation that needs to be happened in consumer use cases. It's like not like your pipe, like a consumer. I don't have a personal ERP system that like I'm, tracking my remittance flows into. Um, and so a lot of the infrastructure back in 2024 was really built for retail use cases. And what we found building at Block was that there was a lot of the stablecoin infrastructure wasn't really fit for purpose for B2B payments at the time, or just B2B use cases, because the way in which you onboard a business is materially different than a consumer. In the B2B world, especially in settlements, it's not high volume, so it's not like you're doing a ton of transactions per day. You're doing like one or two big tickets every week or every other day. And then liquidity needs to be true, and then like how you reconcile those transactions, you need to build it into like ERP systems, and there's just a whole different set of infrastructure that needed to be true for businesses to participate in this space. And so we looked at it and we said that seems like a big opportunity. Let's go start Staple C and serve that.
That's awesome. And then obviously it's been quite a journey over the last uh,
Yes,
almost 2 years now. Uh,
that's right.
Maybe give a lesson to the listener. So, what has been the hardest part? Like, what's been the biggest lesson for you? Is it the strategic stuff? Is it the human day? Like, to your point, going and breaking bread. What's the hardest part about doing this startup?
Yeah, well, I love breaking bread and having a beer with any of our customers, and or just in general. So if anyone wants to grab a beer, hit me up on LinkedIn, and we'll get a beer someplace. Um, so that's definitely the funnest part. I mean, I would say for anyone listening that's like tinkering with an idea or like wondering if now's the time to go start a startup, I think that there's never been a better time to be an entrepreneur. It's also subsequently never been a harder time to be an entrepreneur because because the tools available to you in virtue of like some of the AI tools out there, you can pretty much go build whatever you want. Like software is no longer a moat in a lot of ways, and so it's really easy to build and get started. And then the hard part is finding, going back to that concept of like you have an idea in your head that you cannot be married to because no matter if you think that you're the best thing since sliced bread, you're probably wrong. And it's because the market is also a living entity. So you have an idea that lives in this platonic world of form and it's evolving. And then you've got the market, which is a living, breathing organism that is also changing. And so you need to be flexible with your ideas and you always need to be talking to the market to make sure that like the idea matches the market at this point in time. And then of course, like even if you look at companies, which is also why like storied companies are really interesting to go study. Some of the older companies in the US like a John Deere, like a JP Morgan Chase or like Coca-Cola. I would highly recommend people go check out the Acquired podcast on Coca-Cola. It's just like amazing to see, they were growing, they almost died, they came back, World War II happened, they, like, found their beachhead internationally, like, it's just amazing to watch some of these companies exist and persist over time, and it really shows you that, like, idea time A is gonna be wildly different than idea time B or product at time B. And so I think the hardest part is, like, you think that you can start with an idea, build this product, and the product will become a moat. Like there is no moat anymore. It's really a world of like consumer relationship or like market relationship, and then having the ability to separate your attachment to an idea to what the market wants and being flexible to like move. And then subsequently like building a team structure, building an organization structure, and creating a culture around that you can have that flexibility to turn on a dime when you need to, right? Because it's not just like the founding team that has an idea, but also when you have as you build a team, people come in and they want to, they're working on a project for 2 3 months, and then if you throw that out, there is some you have to manage that appropriately, right? So like building a culture that's really one of experimental. Like we tell everybody on our team that like everything that we do is a A/B test. So like we're gonna A/B test this month. Whatever we learn, we're either gonna keep it or we're gonna throw it out. Next month, we're gonna A/B test. And then like that's how you build a set of assumptions that turn into something that can build a foundation that is going to become a vanguard of industry in 5, 10, 20 years. But you really need to detach like your affiliation or like your self-worth or your self-identity with the product to like what the future holds because yeah, it's just a constant state of fluidity. Everything's always changing.
Very good lessons to our listeners. But to conclude, what makes you the most optimistic about the coming days?
Yeah, I mean, uh, there's a lot to be optimistic about. I think for me, the mission of Stable C really is to take Wall Street products and provision them out to Main Street. It sounds like a cheesy tagline, but it's underwritten with um, a great philosophical weight. Because the actual implications of that, if like you can drive capital efficiency in businesses around the world that are creating jobs, that are creating labor markets, etc., that knock-on effect has employment opportunities attached to it. It has reinvestment capital attached to it, which means like new product innovation cycles. It has like state level GDP attached to it. It's got national GDP attached to it, and then it's got global GDP attached to it. And so it makes what I get optimistic about is that, um, the barriers to adopting high quality financial services are being lowered. And I think that that's going to buoy the livelihoods of businesses and the employees that work in them. And it's also going to buoy and bolster, local economies around the world. And that gives me hope for economic prosperity, to the extent that people can be a little bit better off today than they were yesterday.
Fantastic point. Thank you so much for your time today. True pleasure talking to you.
Of course. Thanks for having me. Appreciate you.
To clarify, the views and opinions expressed in this podcast are those of WisdomTree and StableC and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.